Japan's prolonged near-zero interest rate policy made the yen the dominant global funding currency, anchoring large carry trades into higher-yielding U.S. assets, particularly treasuries. A sharp Bank of Japan rate hike compresses interest rate differentials, abruptly increasing the cost of yen funding and destabilizing leveraged carry trade positions. Carry traders liquidate US dollar assets, including treasuries, and repurchase yen to repay liabilities, mechanically pushing treasury yields higher and strengthening the yen. Japan's extreme dependence on imported oil means global energy shocks raise domestic inflation risk, increasing pressure for further tightening and accelerating carry trade unwinds. U.S. actions constraining Venezuelan oil exports raise global oil risk premia, reinforcing inflation expectations, tightening financial conditions, and amplifying deleveraging. The US dollar weakens against the yen due to repatriation flows, but may strengthen against other currencies as global stress increases demand for dollar liquidity. Other countries sell US assets not by imitation, but due to reserve defense, margin pressures, duration risk reduction, and shifting yield incentives. Rising treasury yields and foreign exchange volatility expose settlement, collateral, and liquidity frictions in correspondent banking and securities settlement infrastructure. Sustained cross-border liquidity stress increases incentives for real-time, atomic settlement systems that reduce reliance on pre-funded accounts. Volatile foreign exchange, higher yields, and fragmented correspondent banking increase the cost and risk of pre-funded nostro and vostro liquidity. The XRP Ledger enables atomic, real-time settlement without pre-funding, directly addressing liquidity fragmentation. XRP functions as a neutral bridge currency that allows value to move between fiat systems without holding foreign balances under stress. Ripple integrates XRPL into regulated payment flows, aligning with global objectives for faster and cheaper cross-border payments. SBI Holdings positions XRP and XRPL as settlement infrastructure that complements Japan's monetary normalization by reducing foreign exchange funding dependency. Under U.S. Treasury volatility, XRPL-based settlement reduces reliance on correspondent banks and intraday credit through T+0 finality. In an era of tightening liquidity and structural stress, XRP and XRPL function not as speculation, but as plumbing for cross-border settlement.